Okay, let's get started. So just know that this is recorded, ladies and gentlemen. And the reason for that is because I want to make sure that you guys have a copy of it so you can, review it on your own leisure in case you have any questions or anything that you missed. And also for the individuals that won't be here, they can actually take a look at it in their own preview. So first and foremost, I just want to thank each and every one of you guys for being here, right? I'm definitely excited to do this again. We did the small to large account in February, and it's really started with one of our members saying, "Hey, Castro, you always plan with, X amount of dollars, trading 15, 20, 30, $50,000 or whatever. Why don't you just bring it back to the basics, because a lot of us don't have that type of money. Just bring it back to the basics and just, come back to what you started as far as doing a small account, $500,000, $3,000 and showing people how exactly they can turn such a small account to a large account within a few weeks to a few months. So I said, you know what, that's pretty exciting. I said, let's do that. So that's what this originated from, one of our members sparking that idea to me. And this is the second one we've done. So this,
All right, take care,
this,
guys.
this form is really intended for individuals that have some type of baseline when it comes to options, right? And the baseline means that you know how to buy, right, options, and you know how to sell options, right? At minimum, you should know that. So you should definitely know your platform. And if you don't know your platform, that is okay, because this is a learning and education environment. And as we go through this journey for the next 4 weeks or so, it's going to be a lot of things that you learn, right? If you got a chance to look at the video that or the link that I posted on the Facebook page, understand that you can actually trade with actual real money liquidity, or you can trade with the virtual account that you have set up on TD Ameritrade, right? So you have two choices. The recommended choice is the TD Ameritrade virtual account, and I will show you that in a minute. But ideally, that allows you to lose nothing whatsoever when it comes to monetary and gain so much knowledge and gives you peace of mind, right? So that in a nutshell, that really is what we're doing here. What's going to be the focus for the next 4 weeks as we do this monthly challenge. And Okay, we're back. I have no idea what happened. Nonetheless, we are back. We're back. Okay, not sure what happened, but I think my system went down. But we're back though. That's what it matters, right? Like I was saying before, expectation management. What exactly expected of us as we actually go through the journey for the next 4 weeks, right? So who are we, right? We are YS Stocks and Options, and what we are is a small, growing community in which we actually focus on generational wealth, right? And when we talk about building generational wealth, it's building part, really focusing on the foundation, right? Establishing the foundation. And the generational wealth is it's not about just assets, right? But it's also about values. It's about instilling those key things that we hold to be valuable to our children and the next generation thereafter, right? So that's what we talk about, with, of course, emphasis on stocks and the equity market for this community, right? So that's who we are. Um, as I said, the session is recorded again, so you guys can have it after each session that we do, and then you can take a look at it. So today we're going to be talking about a series of things, right? But the main focus, right? We've made money in a bearish market or declining market. We've made money in a market that's advancing. We've made money in a market that's accumulating or distributing, right? And the key takeaway to our success is truly understanding that environment, right? And that environment is the different phases of the market that I just spoke about. I think I'm frozen. Can you guys hear me?
We can hear you. It's a little choppy, but we can hear you.
But you're correct. The video is frozen.
Yeah, I see that. So what I was saying is that the key to our success has been knowing what type of environment that we find ourselves and being able to employ strategies, right, that make us successful in those type of environments. And the environment that we're going to discuss today, and I will show you guys, is accumulation, right, distribution, advancing, and also declining, right? When we understand which environment that we're operating in, we're able to, employ different type of strategies in order for us to leverage and capitalize on the market. For the last few, I want to say last almost 2 months now, we've been using puts, right? Put debit spreads, sometimes calls, depending on the market, because we find ourselves in a declining market, right? You've seen, if you guys are investors, you've seen your portfolio just taking a huge hit, 15, 20% in the last 2 months or so. Maybe your TSP is because everything that was of value or everything that had a high PE, price to earnings, has come down just a tad bit because of either COVID, scare of higher interest rates, right? Now we have this conflict with Ukraine and Russia and all the resources that Ukraine has and the oil of Russia, right? It's a lot of different things that impact the market, right? And we will be discussing some of those things if my system decides to wake up. I may have to. Guys, give me 1 second. It's like my computer has stage fright. Doesn't want to cooperate. Can you guys see my screen though? At the very least, can you guys see the FinViz?
Yes.
Okay, if we can see FinViz that is still fine, we could continue on. I would just close a few things just to give me some space because I think some of these items just don't want to work because of that. I can close this here. Task manager. And task. Well, I think it should work now. Okay, so let's get to it, right? So what I'm going to show you, we're going to go straight into the strategy, right? And I called it the YS Fibonacci retracement strategy. It's something that I pretty much developed through some different strategies that I've used before, like when I first started trading, right? And the stock that I had up earlier, and I'm going to actually go here for the full screen so you guys can see everything.
Can we all still hear each other, or is it just Castro that's gone?
I think it's
I think it's just
Castro.
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 I think it's Castro.
Okie dokie. All right, so while we're waiting for him to get up online and come back, like let's all open up the week with first and foremost, did everyone get a chance to take a look at the market forecast for the week?
Yes.
Okay,
Yes.
cool.
Yes.
All right. And then I guess based on your review of the market forecast, what are some of the strategies that everyone is thinking of taking either on stocks that we've previously traded or endeavors that we've been looking into ourselves?
Well, did I was looking at SPY? Oh,
It's chopping up.
I was taking a look at SPY.
To buy calls.
It seems like my computer's having like stage fright for some reason. I don't know what's going on.
while you were out, sir, we just started discussing the market forecast for the week and then strategies that we're looking at taking. So you get up and run it.
Yeah, I don't know what's going on today. Okay, let's get to it. So yeah, I was asking, thank you for that, Deanna. Yeah, so I was asking, do you guys know what a moving average is? What is a moving average? Anyone can help me out? Moving average, simple moving average, exponential moving average. Anybody want to take a guess?
It shows where the stock is going to move given a specific period of time.
Yeah, that's exactly it, right? That's exactly what it is. It's an indicator that shows an average value, right, or price action of a stock ETF, right, at a certain period of time. So when you have moving average, you have 8-day moving averages, 12-day, 15-day, 17-day, so on and so forth, right? The period is how many days, right, within that time frame in which direction the stock moves. So for today, right, today we're going to be talking about the 21 moving average. And I will be using the word interchangeably with the word mean, M-E-A-N, right? And again, when I refer to the word mean, right, I'm really talking about the 21 moving average, okay? And so that's what this blue line here, right? This is the 21 day, right, exponential moving average. And this is going to be very key to our strategy, right? So step number one of our strategy is identifying within your chart, right? What you guys see here, this is FinViz. FinViz is what I like to use for trading. This is what I've been using for years, right? But of course, I use other applications. But FinViz is like one of my favorites, and I will explain that to you a little bit later. So the first thing that you want to do is you want to place the 21 moving average in your platform, right? And FinViz, very simple in FinViz. You just go to settings, right? On the left-hand side here, after you hit settings, you can change exponential moving average. You can turn it to a simple moving average. But for this one, right, I like the exponential moving average, right? So we're going to be talking about the mean excessively today, right? Step number one, identifying the mean, right? The moving average. And so a phenomenon that's very, very cool when it comes to the moving average and the 21, the mean itself, right, is that the mean seems to be the home base, right? Seems to be the focal point at each one of the price actions for ETFs. And what do I mean by that? I mean that whenever a stock, right, or the price of a stock goes above the mean, right, it finds itself back home again, right? It might go up, then it comes down. It goes all the way up, right? Hovers up, but it comes back down, right? Might go below it, right? Comes back up again, right? So the mean is really, really important to our strategy. Because again, everything that we do is going to be based on the mean, the 21 moving average, right? When we enter a position, when we buy something and we sell something, the mean is going to be very important, and we're gonna see how that plays out, right? So again, step number one, identifying the mean and placing it in your chart, whether you're using TradingView, Ameritrade, Thinkorswim, E-Trade, whatever the case may be, right? So that's step number one, right? Step number two is understanding the relationship, right, of the mean with our strategy, right? And what do I mean by that? Is that the mean is going to be where we buy and where we sell positions, right? We know that whenever you purchase a call, that means that you're betting that the stock is going to go up, right? Call up, meaning you're expecting the price to go up. And if you're buying a put, right, put down, you're expecting the stock to go down in price, right? So again, understanding the relationship or the buy zones of the mean is extremely important, because ideally, right, we want to buy very close to the mean, right? Here, right? Ideal conditions, we're trying to find a place to buy the mean, right? And we're looking at the daily chart here. That means that each one of these candles represents one day, one trading day, right? All right, always here where we're gonna try to purchase calls or puts, right? Depending on where the stock is bullish or bearish, right? Here. Right. Here. Right. So that is our step number 2 of our strategy. Identifying the relationship that the mean plays with buy zones and sell zones, where we buy our call options and when we buy our put options, right? Step number 2, right? Step number 3 is ATRs. And you probably asking, Castro, what the heck is an ATR, right? If you go to FinViz, this is please mute your mic, guys. We want to make sure that we don't disturb anyone, so everyone's understanding the lesson here. So if you go to FinViz, each one of these stocks or ETF has an average true range. And what that means is that on average, right, how far or how many dollars does the stock move up or down, right? Again, on average, what is the displacement of that particular stock, right? That's what the ATR is, average true range, right? So this stock here in particular, Palo Alto, which is a security firm, right? Software infrastructure company. On average, it moves $28.58, right? Amazingly, we traded this one on Friday, right, guys? And it was at $550, and it ran all the way to $570 when we closed. We caught it a little bit higher, but as you guys can see here, right? I'm going to zoom in here. Here, right? This particular stock, Palo Alto, it opened up. Well, the lowest it was $531.73, and it went as high as 570 cents, right? So that average is about what? About 20. Oh, Jesus, that was 37 bucks, roughly 37 bucks and 50 some cents, right? But $38.59, right? But of course, the average being 29. But for this particular day, the stock ran up $38.59 up. Pretty impressive. We're at 50 some cents up. But on average, it moves $28.58. So that's step number 3. Identifying what is the mean, the ATR for that particular stock, because it plays into our strategy, right? The ATR is where we also want to take profits at, right? Everybody asks, hey, Castro, if I'm actually going to buy this stock, I understand at what price I want to buy it at, or what area do I want to buy it, but where exactly do I take profits, right? The ATR tells you that, because think about it. If a stock moves $20 in one day, you're not going to wait for it to hit $40, because you know that $20 is the average and $20 is more realistic than $40. Yes or no? Show of hands.
Yes.
Yeah. Yeah. So if we would have bought this one here, right? What we do, we just mark the ATR. If we know it's $28, right, from the mean, right, being right here, 510 bucks. If you ate $20 to it, it's 38, right? So it'd be like roughly right here. If we add $28 to 538, it's like what, 66? Like roughly right there, right? So the point that I'm showing you that if we would have bought it here, look how close that is. Like that is really off by what? $1. See that? If you would have decided to buy here the ATR, at the mean, look at that. Boom, you could have took profits right there and would have been golden. Make sense? Okay.
It makes sense.
So just to check on learning, right? Because it's very, very important. We just went over step number 1, step number 2, and step number 3. So what is step number 2? Anyone?
Understanding the
relationship to the
relationship
mean.
of the buy and sell zone in relation to the mean.
Yes, so let's do this. Yes, definitely. That's the right answer. So raise your hand and then I'm gonna call on you, okay? So yeah, that is the answer. Understanding the relationship, right, of the mean, which is the 21 exponential or simple moving average, right, to buy zones and sell zones, right? That relationship is very, very important because it tells us where we want to buy, right, our calls and where we want to sell our puts, right? Very, very important, right? Okay, what about, good answer. What about step number one? What's step number one? Raise your hand and then I'll call on you. Anybody? Step number one. Okay, let's go with JT.
Really just finding and placing 21-day moving average on your platform and understanding how to chart the mean on whatever platform you're on.
Exactly. Yes. Yes. Right. Exactly what JT said, right? Placing your 21 moving average on your platform, right? That's the first thing. The first thing you want to do, right? All right. What about the third? What is the third step? Damon?
Just identify the ATR.
Yes. Yes. So how do we identify the ATR?
Just through FinViz, it's listed on FinViz. You go down to the right-hand side and you'll see it right there.
Yes, exactly. You find it in FinViz, right? Right. And this strategy, believe it or not, it gives you a very high probability of success. In February, we used the same strategy, taught it just like this, took a few AAR comments, and believe it or not, ladies and gentlemen, we did about 10 to 12 trades using the same strategy. And every trade, we made at least 30%. So that's impressive. The S&P 500 last year made about 28% return on investment. And we made 30%, 40%, 50% every trade minimum. So yes, yes, beautiful. Thank you. Thank you for that. So now that we understand those three concepts, right? Now, what we like to do, right, is putting that information into our planning tool. And our planning tool is just a document. You should have seen it. You should have seen the planning tool on the link that was sent out and also on Facebook. And the document, this document here is what we fight off, right? Every trade, right, that I've placed, right? Like I want to say the 24th to the 29th, right? January. These are the trades that I got into using different strategies. The ticker is the stock that I'm trading. The catalyst, right? The catalyst is any piece of information, whether it's technical analysis, whether it's news, whether it's a, momentum, volatility, right? That I'm using in order for me to get into this particular trade, right? The buy zone, right? It's at what price do I want to buy it at, right? Identifying a key support level for stock is a really, really good place to buy it at. Without strategy, right? We like to buy at the mean. That's what we like to buy at, right? The mean is always going to be the answer. If it's not the mean, it's between the mean and the 1 ATR, right? And the 1 ATR, we already identified that. And we just talked about that. And the 1 ATR will be, if I was buying this particular stock, Palo Alto, just like we bought it on, guys, we bought this Friday, right?
Yes, that was Friday.
Yeah, we bought it, ladies and gentlemen, we bought it right here. We bought it at 550, right, guys? Was it 550? Yeah, we bought it at $550 and it ran up $20 thereafter, right? So acceptable, right? It's always acceptable to buy between the mean. The mean is at the ideal conditions, right? But the mean and the 1 ATR, right? That's usually what you want to buy. You always want to buy ideally here. Ideally, you want to buy right here between the mean and the 1 ATR. This is the 1 ATR over here, right? Let me mark that up here so you guys can see it. ATR. Bold. I like blue. I like pink backgrounds.
So is that like number 4?
So it goes hand in hand with number 2, just the buy zones to sell, right? The 1 ATR. You always want to buy around this area. Either if you can buy it at the mean, between here, the mean and the 1 ATR, it's definitely acceptable, right? Definitely acceptable, right? So let's go back to, yes. So let's go back to the planning tool, right? So the planning tool is, again, it's the document that we fight off. Every trade that I've done in the last 3 years, I use my planning tool, right? That is sometimes that I don't, it's rare occasions that I don't use my planning tool, right? But 99.999% of the time when I trade, I fight off this, right? During this time here, the 24th to the 29th of January, again, the ticker is just the stock that I'm buying. What am I buying? I'm buying Palo Alto, PAN. So I will put here, I'll go PANW, right? Palo Alto. What's the catalyst? What am I using? I'm using the wise Fibonacci strategy, right? Right. Castro came up with this, right? Where am I going to buy it at? Well, we bought it at 550, right? That's where we bought it at. But ideally, you want to buy at the mean or between the mean and 1 ATR, right? My sell zone, right? But profit zone, you always want to sell, right, at the 1 or 1 ATR or the 1.5 ATR, right? The 1 ATR or the 1.5 ATR, right? So let me show you so you can actually conceptualize this concept. If I would have bought it here at the mean, the 21 moving average, I will want to sell it here at the 1 ATR. That's what that means. If I bought it at $510, I would have sold it right here, because look at this stock. It literally was $1 off that 1 ATR, right? Because it usually travels that, right? Boom. If I would have bought it here at the 1 ATR, I would have sold it right here, right, at 566, 557. I would have bought it at $537.80 something cents. I would have sold it at, right, ideally at the 1.5 ATR, but being that this sector was hot, we could have sold it here at 566, right? But you always want to, if you buy it at the mean, you always want to take profits no more than 1.5 ATR. Anything past 1.5 ATR, you're becoming very greedy, right? You're not following the steps, you're not following the rules, and your probability of success, right? You have now turned a high probability trade into something that is more moderate to low probability, right? That's the importance of actually following those guidelines. So when I go to my planning to like Palo Alto, for example, I would say, okay, I'm buying Palo Alto, right? I'm using the wise Fibonacci strategy. I'm buying at the 550. That's where I bought it at. But I'm really buying at the mean, right? Buying at the mean, and I'm selling at the 1 ATR easily, or the 1.5 ATR. So for myself, my stop zone, right, is a price, right, in which the stock reaches if my trade doesn't go in accordance to my plan. Again, my stop zone is the price of the stock, right? The price that the stock reaches if it doesn't go my way. I say again, the price that the stock reaches if it doesn't go my way. So let me show you here so you can conceptualize that concept. So if I would have bought here at the mean, right, the moving average, my stop zone is usually 30%. So 30% of 511 is roughly what? 15 bucks. So my stop zone would have been right here. That's a rough estimate, right? So my stop zone would have been right here. And look at that, it has support there, $498 roughly. So when I go to my planning tool, you guys see how the importance of this planning tool? I would say, okay, when it reaches $498, it's gonna trigger my stop zone and I'm gonna get out the trade. Make sense?
Yep. Makes
Okay.
sense.
And for the option strategy, right? The option strategy, we like to buy at least 2 weeks out, right? At minimum 2 weeks out, right? Ideally, you want to buy 4 to 5 weeks, but 2 weeks out is acceptable, right? It's a little bit more risky, but 2 weeks out for this challenge, right? Because we're doing a weekly challenge. We don't want to stay in a trade for too long because we want to make sure that we make money every week. So a 2-week, right, expiration is ideal for these conditions, right? So all our expirations are going to be 2 weeks out. So if we buy today, right, we're going to be selling by the 11th of March. That will be our expiration date. Okay. And the premium is just the price in which you pay for it. You know, sometimes you may pay for $1, $2, or but for the most part, we like to keep our trades less than $2, or at the most $2 premium. So that means if it's $2, right? That means that the contract costs $200 per contract. So here, what I bought, right? I bought the 560. I bought this last week when we are online trading together. I bought the 560, 570 call debit spread, right? Expiring on the 11th of March. That's what I bought it for. So I was making $1,500 on this trade on March, right? I mean, not March, on Friday, right? On Friday, I was making $1,500 on it. And I'm gonna place it here so you guys can see it. But of course, what was I doing? I was sleeping. So I couldn't sell the trade. There you go. So on Friday, some of us are greedy. Some of us, wanted to make $5,000, $6,000, and that's when it was an easy trade. So this is what I was making. I just put this here. You see, I was making $1,500, right? $1,500 on the trade, 33%. I was taking a nap though. It was like 2 o'clock in the morning. So I could have easily sold this. When the market opens, you know what I'm gonna do? I'm gonna sell this. And I have just made $1,500. My goal is usually between $5,000 to $10,000 a week. Sometimes I make more, but this is easily part of my goal, right? 33% is acceptable for me. So what I did when my planning tool was easy. I went to my planning tool and I knew that I was going to sell at the 1 ATR, right? 1 ATR. And we know the 1 ATR is what's the distance? What is the 1 ATR for this one? What is the ATR for Palo Alto?
28.58.
Yeah, 28.58. So this sucker here, we bought it at 550. It ran up $20. I was expecting to sell it on Friday. I would have sold it Friday if I was up. But don't get me wrong, it's up right now. So I'm gonna be up probably like $2,000 when the market opens. So that's not bad, right? I waited a little bit longer and I make an extra $500. So that's not bad at all. But ideally, I don't get greedy, right? 30% to me is acceptable because sometimes I play with $20,000 to $30,000, and 30% of that is $6,000, $10,000, right? If I play 50 grand, 30% that's $15,000. But if I'm consistently making $10,000 to $15,000 every week, by the end of the month, I've made easily close to $100,000, right? Not even stressing. So that's why 30% or 1 ATR is an acceptable price target that you don't have to stress about. All right, so here you just put the premium. How much did you pay for it? Right? If you pay $2 for it, you put $2 and so on and so forth here, right? I bought yeah, so I forgot how much it cost me. And I bought 3 contracts. I bought calls on this one because I bought Robinhood, I bought 560, 70s, and then I bought regular calls as well. And I bought 3 of them, right? But I'm making $1,500. So I just went over the planning tool, right? I know the planning tool could be a little bit intimidating because the first time you've seen it, but just know that we're gonna go over this together. We're gonna be trading together, right, for the next 4 weeks, right? You guys know the schedule. The 28th is today. We're gonna meet on the 7th, right? We're gonna meet on the 14th. We're gonna meet on the 21st, and the last day is gonna be the 25th, that Friday. So all of this we're gonna be doing together, and we're gonna go over this every week after, so often that you're going to be a pro, you're going to feel really comfortable. You're going to be like, Castro, just stop talking about this planning tool. I already got it, right? But for now, what are your questions? That's really it for the strategy. I wanted to keep it really basic. Again, the moving average, the EMA, the buy zones, and the sell zones, right, in relative to the mean. Number 3, the ATR. Each stock has an average to range. The planning tool, right? We always use the planning tool when we trade. And the last thing, before I move to the last thing, which is the finding suitable stocks that fit our criteria. Because ladies and gentlemen, we don't trade any stocks. We trade our plan. We have a plan. We find stocks that meet our plan, right? Based on trading criteria, and then we execute our plan, right? So before I move forward to step number 5, I just wanted to leave the floor open to any questions or comments, either from my fellow coaches or community members, or any questions that you guys may have.
Question I have once again: how did you determine the stop zone price?
I just like to use 30%. Like,
Okay, gotcha.
yeah, 30% is usually like my I don't have, yeah, 30% is usually my price that I like to use. But ideally though, like I like to use half of the ATR, right? So if the ATR is $28, usually $14 would be where I try to get out for this one in particular. So if I know that the mean is right here, right? Half of the so 1 ATR just means that it moves that amount, right? So if it's at 510 here, $20 would be 490, right? But $28 would be 90 minus 2, 82.
Gotcha. Thank you.
Yeah, so mine would be like half of that. It would be like 14, right? 14 from this. Be like right there, right? That's usually a good stop zone. Half of the ATR is really good, right? So if you buy it at $500 and you know the ATR is $20, I will be, having a stop zone for either 30% or you want to get out at $490, right? Again, if the ATR is $500 and if the mean, if the mean is $500 and the ATR, the average true range of the particular stock is $20, right? A suitable stop zone could be half of the ATR, and a half of the ATR, which is 20, is 10, right? Or 30%, right? Both of those are acceptable. Any other questions? No questions? I must be like a phenomenal teacher, which I don't think I am.
You up there with the grades, bro.
Yeah, I was gonna say this is my first time on one of these, and everything's been explained simple enough for me to understand it off the start. So it's good job, man. I appreciate you.
Thank you. Okay, Jonathan has a question. He has his hands up.
Hi, can you go over step 4 again for me?
Yeah, okay. So step 4 was the planning tool. Right. Yeah,
Got it.
what's that?
Thank you.
Yeah, so on the planning tool, And we're gonna trade a stock today, right? If you guys are ready. On a planning tool, it's saying, okay, what stock am I gonna trade today? What stock meets my criteria? Oh, you know what? I like Apple. Apple is sitting right there to me. Okay, what strategy we gonna use? Right? We always gonna use the strategy when we trade together, right? The wise Fibonacci strategy, right? That's what we're gonna use. Where we gonna buy it? Well, we like to buy it at the mean, right? Or same thing as the 21 exponential moving average, right? Where we gonna take profits? Well, as soon as it crosses the 1 ATR, whatever the ATR is, we're gonna take profits, right? What's gonna be our stop zone? So if we buying calls and it doesn't go up, all right, where exactly are we gonna place a stop? All right, we're gonna say, you know what, 30%. We like 30%. So whatever let me get this formula here. Let me get all these formulas. I don't think I have them here. Copy. Boom, special pace, values, formulas. All right, so this one here, we're gonna say, you know what, when it reaches 30%, right? And 30% may be, I don't know, when it reaches $145, we're gonna get out of it, right? That's gonna trigger it's gonna trigger the algorithm to sell it, right? And we're gonna set that up, right? And the option strategy is basically, what are you buying? Are you buying calls? Are you buying puts? For us, right? The strategy that I love to use and we've been using is call debit spreads. And the beauty of call debit spreads is because not only they're very affordable, but the expiration date, you can have them for 4, 5, 6, 8 weeks, right? Until they expire, which gives you a lot of time for you to let the stock itself mature, right? And develop. That answer your question, Jonathan?
Yes, sir. Thank you.
You're welcome. And again, we're gonna do these together, right? So the market's gonna open here shortly, and we're gonna take our time, right? And then we're gonna get into one trade. The final piece that I want to get into after I answer Jameer's question is gonna be, how do we find the stocks? Jameer, what do you have?
So my question is kind of on the outside of this in general. And maybe we'll talk about it offline. But I'm trying to see, so how do you all, given, these are basically how we working on the short-term side, how do you all approach taxes, and how do you do it, that kind of thing? I don't know if we ever discussed it. This is my first time here. I was just wondering, how do you all approach taxes, given obviously it's all under the short-term part piece?
So I have a CPA,
Okay.
and yeah, my first year I did really, really, really bad in taxes. Like, yeah, so I had to pay. Yeah, I had to pay a lot of money. And then, one of my frat brothers, he told me about his CPA because he owns like 15 houses, and they took care of me, and I was paying like every quarter
Yeah.
$6,000 just to catch up.
Got it. Okay. All right. That's what I was wondering.
Yeah.
Thank you.
No worries. Yes, taxes scared me, so I let the professionals take care of it.
That's right. That's right. All right.
Any other questions before we go to step number 5, finding these stocks? Norman, did that make sense? Was it clear as mud?
Hey, yeah, man. I'm following. This is good stuff. I'm like, could I just be thrown to the wolves and say, go analyze a chart and tell me where the play is? Like, maybe not quite there yet, but no, like it all makes sense. Like how you identify where the buy zones are, that the average true range, like how you're determining that to both stop your limit or reach your limit and stop your losses. That, like, yeah, it's making this seem like less and less guesswork and more by the metrics, each time I sit in on these. So no, it's like definitely following real easily so far.
And the beauty of it is that we're going to be together doing this every week after week, using the same method. And I'm going to add a little bit more to it that you guys are going to feel very comfortable, because I would tell you, okay, how do we buy puts and how do we know if a stock is bearish, right? So little things like that, but just the confidence that we're going to build in the next 4 weeks is going to be, very, it's going to be tremendous, because we're going to do this together. We're going to make profits together. And yeah, I'm definitely excited. The market looks bearish today. Okay,
Hey,
so go ahead,
when you,
somebody.
yeah, this is Rob. When you mention buying at the mean, can you give a little bit more clarity? Are you talking about consolidation at the mean? Are you talking about when, a bearish candle or, a bullish candle approach the mean? So for example, when we look at Palo Alto, there's a couple of times where the candle meets or surpasses the mean, which would indicate, for example, one I'm looking at around November, it's a bearish candle following a series of bearish candles. But after it crossed the mean, it immediately reversed to the upside. So when you say at the mean, are we looking at consolidation at the mean? Are you comfortable as soon as it touches the mean? If you could just give a little bit more clarity on that.
Yeah, I'm glad you mentioned that, because yeah, it's at the mean, but I'm gonna add a few more indicators. I'm gonna add like 2 more indicators so you guys can understand just today, right? Today I'm gonna add 1 indicator, which allows us to determine, right, if the stock is gonna go up and what strategy will be the best one to utilize. So at the mean just means as soon as it touches it or it breaks above it, right? So an indicator that I'm gonna add to this one here, it's gonna be the stochastic, right? And the stochastic is just a movement indicator, right? It measures the movement of the price of a stock for the upside or downside, right? Again, that is the stochastics, and I like to use the slow stochastics. Yeah, the slow is fine. It's not my favorite, but I was using something else. No, you know what? Let me use the fast.
I think the last time you had the slow and CCI, if I'm not mistaken.
Yeah, I did, but I usually don't use this one to trade at all. But yeah, so the slow one is fine. It's acceptable, right? I like to use the stochastics and also the CCI. Yes, I do like to use the CCI, and I'm going to explain those, right? The CCI is a commodity channel index. It measures the. First of all, you guys should know that. Can somebody help me? What is the CCI? My veterans who've been here with me for quite some time. Anybody? CCI. We've been talking about
Measures or
CCI.
identifies divergence.
Is that it? Anybody else want to help? Shedrick?
See, no, I'm sorry. I'm mixing up my notes, brother. So it's a combination. I was thinking about CCI and like RSI, like the combination of measuring, identifying divergence. CCI, like if it crosses the 0 line, it's kind of like it's getting ready. Like if it's trading below the 0 line, could be bearish. So like we might want to buy puts, but it's the commodity channel index.
Yeah, it is. Yeah, it's an oscillator that was introduced by Donald Lambert, right, in 1980, right? So it's definitely grown a lot of popularity over the years. So what it does, it used to track the movement of the market, right? Whether it indicates a buy zone and sell zone. So whenever people say, oh, I'm looking for a buy zone, right? They're usually talking about the commodity channel index, right? Again, Donald Lambert was actually the founder in 1980, and it's gotten very popular. And that's the one that I use. I learned from Market Rebellion when I do my chart analysis. For the last 5 to 6 weeks, I've been charting stocks, and I think my the community members think that I'm some type of wizard or whatever. But I'm really not, right? I pay a guy like $3,000 to learn how to do a few things, and I've gotten really good at it. And for the last 5 to 6 weeks, we've been spot on our forecast when it comes to the market or whatever. So I use the CCI a lot, right? The Commodity Channel Index is one of my indicators that I love. I'm glad you brought that up, Rob, because I was forgetting that. I was forgetting to use those indicators as part of that of our steps. Matter of fact, again, the CCI, right? It tracks the movement of the market, and the market could be a particular stock. The market could be one of the futures, right? And it indicates where there's a buy zone or sell zone, as Cedric just mentioned, right? So what about the stochastics? Can anybody help me with the stochastics? Where's the stochastics? Stochastics indicator. Yeah, that's exactly what it is. George Lane, right? He founded in 1950s, right? And what it does, right? It refers to the current price in relation to the price range over a period of time. Again, it refers to the point or the current price of a stock in relationship to the overall period of time, right? So, so in essence, like, if you see the stochastics trading above, very simple. If you see the stochastics here trading above 80, right? It tells you that historically, when it trades above that price, right, the stock has a tendency to come down, right? And if it trades below, right, below 20, right, historically has a tendency for the stock or the price to go up, right? Again, it was founded by George Lane, right, in the 1950s, and it refers to the price, right? Well, it refers to the point of the current price in relative to the overall period or the price range. Make sense? So just to go over it again, whenever we talk about the stochastics, if the stochastic is trading above 80, right? Historically, the price has a tendency to come down. Hey guys, who's on Palo Alto? Palo Alto, how many of the members in Palo Alto?
I just closed out my position with Palo Alto.
Yeah, don't get greedy, okay? I know you guys are greedy. Some of you made a lot of money with Palo Alto. Let's keep making money and let's get out of it, okay? So if you're in Palo Alto, please get out of it, make your money, and let's move on. Jay, don't get greedy. All right. That was an admin. No, sorry about that. Some of our members are very greedy. I want to make $10,000. I'm like, yo, you just made 5. Like, be happy. All right. So yeah. So whenever a stock is trading above 80, right? Historically, right? These historically means that it's overbought and the stock has a tendency to come down. Whenever the stock trades below or at 20 or below, right? Historically, the price action of the stock has a tendency to come up. That's like, for example, here, right? Like here, you see this? You see how it's trading, right? It crossed right there. And so there are 2 parts of really 4 parts of the stochastics. You have the percentage K, which is the black line here, and you got the percentage delta, right? And the percentage K, whenever the percentage K crosses the delta, percentage delta, it is said that the stock, right, especially below here, the stock is become bullish. The price action goes up. And look what happened here relative to that. See this? Right? Here, whenever it was above 80, right? You notice that, boom, the price went down. See that? Or maybe you're able to see this, see? Does that make sense? So this in essence, also with the CCI, right? CCI, the same thing. When CCI is trading at 100, when a CCI trades at 100, this usually is a buy zone, right? These are usually called buy zone. Look what happens. Boom, takes off, right? When you use these two indicators together, stochastics and the CCI, you can have a very, very powerful indicator that lets you know when it's a good entry for you to buy, to enter the stock, right? I'm glad you brought that up, Rob. Any questions about those two indicators? Again, the stochastics refers to a point of a current price in relation to the price range over a given time, right? Given time, keyword. Okay. Any questions, comments?
Yes, so for the stochastic, what does the 14.3 mean? Is that a day count? Is that a
The 14.3 is just it's the cycle, right? So for the 14 is the percentage K, right? Which is this one, the black one, and the 3 is the percentage delta, right? Just a cycle of it. It represents the two moving averages. Good question. Anybody else? But this is the time to ask questions. So if you have any questions at all, there's no such thing as a dumb question, right? This is a learning environment. Okay, no questions asked. Okay. Now we're gonna go into finding these stocks, right? How do we find these stocks? Well, on FinViz, it's really, really easy to find these stocks, right? What I like to use the screener, right? These are different tabs in FinViz. You got home, news, screener, right? This is what we're going to use. And for the screener, yeah, I'm gonna use the screener here. For the screener, right? I like to use the all, not the descriptive, not the fundamental, not the technical, but all, right? And the all gives me all the parameters, right? All the parameters. So the moving averages, right? Oh, I forgot one. I missed it. The stack DMAs. Stack DMAs. I'm gonna add that for next week, right? Stack DMAs is gonna be another one that I missed on the steps, but it's okay. No worries, right? So yeah, let me write that down. Stack DMAs. Stack DMAs tells us when a stock is actually trending upward, right? But it's okay. So it's very important, but I will add it for the next class. So now we got to find stocks that are suitable for our strategy. So what I like to use, right? I like to use the moving average, right? So we want something that's trading above the moving average, the 20-day moving average, because when stocks are trading above, right, the moving average, that they're considered bullish, right? They're considered bullish and means that, you know, they're more likely to go higher in a price action, right? So we're going to put here above the 20, right? For the 50, we're going to put above the 50 or below it. It's not a trick question. Not a trick question at all. Help anybody?
Can I throw a guess out there?
Yeah, please.
Okay,
Nobody's helping.
For the 50, I would say that you would want to be below it, because with the 20, you were saying you wanted above would be a bullish indicator. So that means with the 50, it would have to be coming up from somewhere, right? That's just how I'm trying to conceptualize it. But is that wrong?
Yeah, it's wrong, right? You want to have it above because again, when a stock is trading above the moving average, any moving average, that means that it is bullish, right? It has a tendency to go higher in price. So for this one, we want to go above, right? Price above the 50 moving average. So what about the 200? Do we want it above or below the 200 moving average?
Above.
Yeah, above too, right? So that's one parameter, 3 parameters that we like to look at. What about the beta? So beta measures, right? So the stock market, right? When we look at SPY, the Dow Jones, right? That is the stock market. The stock market has a beta of 1. If a stock behaves like the market, that means if the market goes down, the stock is gonna go down that same amount. Does that make sense? So for here, we wanna have a beta of at least over 1, right? Above the market. So if the market goes up $5, right? We want our stock to go up $5 or more. Make sense? That's the whole reason behind that. The average true range, right? We want stocks to have a nice average true range, at least, right? At least over 1.5, right? We want a stock that moves at least $1.50, right? Because we don't want to deal with stocks that don't move much, right? We want a stock to have some nice displacement. Volume, who can tell me what volume is of a stock? What is a stock's volume?
How many shares are being executed in a given amount of time?
Yeah, the transactions that occur within that day, right? That's the volume, right? So we want stocks that have higher transactions because it lets us know that a lot of people are trading this particular stock, right? So we like to choose over 500 is minimum, but not under. Over 750 would be good, right? Over 500 is good too, right? Because it's early in the market, right? So anything over 500 is good, right? So that's for volume. Okay. What about price? So for our strategy, we want to focus on stocks that are affordable, right? So for this one, we're gonna go under $50, right? And we want to keep this here small. We want to have a small little list, so we're not searching like 150 pages or whatnot, right? So just to recap, ideally, I also want to do the market cap too, but for this one, I'm not going to do that. The market cap is how much the company is valued at. So just to recap, we like to look at the simple moving averages, right? 20 moving average, price above, because that tells us that the stock is bullish. We like to look at the 50, above the 50 moving average, right? We like that. And also the 200 moving average. Anytime a stock trades above the 200 moving average, that stock is considered bullish. So we definitely like that, right? So for the beta, over 1, because we want to make sure that the stock behaves, not exactly like the market, right? We want it to be, when the market goes up $1 or whatever X amount of dollars, we want the stock to move a little bit more, right? Average true range, we talked about this. The higher, the better, right? Minimum, we want 1.2, 1.5, because we're dealing with stocks that are very affordable, right? Under $50. So you can't expect them to move, like, $5 or whatever. I mean, so we know that average true range is not $1.50, but it's the average in particular that stock moves. So if it moves 20 bucks, 1.5 will be $20 plus half of that, which is $30, right? So anything at 1, let's keep it in 1. Over 1 is good, right? Gives us a little bit more. Relative volume, right? Average volume. We want stocks that have a lot of people trading them. The more, the better, right? So anything over 500 is good. So now we're going to go into charts. And for the charts, we just want stock that are trading up, trending up, right? Trending up means that they're literally look like the price is going higher. Look at this, September, it was trading at around $17 and now it's trading at 34, right? Stocks, they're gapping up. This is a good one, right? This is a good potential stock to look into. So we're going to get into one APA, right? This is not bad, right? It's trending up since December, right? This one's not bad too. Yes. See, this one is trending up, but it's kind of choppy, right? This one's came down, then up. I don't like that. See, when it goes up here, then this and that. I don't like that at all. Right? This one's trending up too. I like to see this one, right? Remember, we are trading the plan, right? And the plan is to look at a stock that fits our criteria. You see, this one went down and up. We don't like that. This one, it's not bad. No. All right. What do you guys think about this one? Does this one look good?
I think so, because it looked like it's been trading sideways for a little while. So at any moment, this thing is, depending on the moving average, bound to explode for call options anyway.
Yeah, that's true, right? That's true. But for our strategy, though, anybody else, would this one be a suitable? Because we want to find something that has already exploded, right? We want find something that was already going higher and higher and higher. If we look at this on November, it went up, came down for December. January went up, came down. So I don't like this one, right?
Yeah, and then there's like a gap as well. So
Yeah. I don't like this gap neither. Yep.
I didn't notice the gap. My bad.
Yeah. And the gap is something we'll talk about later. What about this one? You guys like this one? Halliburton?
Yes.
Yeah, let's take a look at that, right? It might fit our criteria, right? So right now we're just picking, right? We're just looking at stocks that are trending up. Okay. Do you guys like A, B, or C? A, B, or C?
C.
B.
A, B, or C? Which one?
I like B and C.
Yeah, I like B better though. We're gonna go with B. And we can do this all day, right? So we kind of get the gist of it. Let's go one more page, see if we find some really beautiful ones. All right, A, B, or C? A, tech?
A.
A? Yeah, A. Yeah, exactly. Okay, so we got the gist of it, right? So we got some that we found. Okay, look at this one. Oh, this is, so the 1 ATR for this is $1.77, right? So we see that this one is clearly the price action is going higher and higher. That's a good sign, right? Right here, December, it was trading around, right here, it was trading around $23. It's at $34 right now, right? That's definitely a good sign. That's a plus, right? Ideally, we want to buy that either here or the 1 ATR. The 1 ATR is 177. So if we add 177 there here, it's what, 33? $37 right there, right? Did I add that correctly, ladies and gentlemen? The mean is $32.60. And the 1 ATR for this one in particular, the ATR is $1.77. Is that correct? The 1 ATR being here, 34.38. Please help me. This is a team effort. I can't do it all alone.
Yeah, calculator
34.
says 178. So you're close.
So if we add $32.68 plus 178, what is the total? Is it
34.38.
Yeah, okay. So yeah, so ideally, this is a great one, right? Look, it's sitting right there. The one, any place here, ladies and gentlemen, right? It's a great buy zone, right? This is a place that we can buy, right? We can buy here, then we can sell it at 5, 7. 36.11.
If it's one more, ATR at 36.15.
Okay, thank you. Right. So this is definitely a good one, right? Definitely a good one. Right.
Quick question. Why would we buy there when it's so far off from its mean? So it's already up 1 ATR from its mean, the 21-day average. So wouldn't we want to buy it closer to the 21-day average?
Yes, ideal conditions at the 21-day moving average. So Friday would have been a great day to buy. Yes, you're absolutely right. But remember, our rule is that, as long as it's between the mean and the 1 ATR, it's still a buy zone, right? That's a place where we can buy, right? But yeah, you're absolutely right. Ideal conditions, I would prefer to buy here. Absolutely right. Right. So we're just looking right now, right? We're just looking at some of them. This is not bad, right? Not bad. What about this one? The 1 ATR for this is $1.32, right? It's this one that even look like we want to get into it. $1.33, 22.11, something like that. I don't know, 22.18.
It's almost double the ATR.
Yeah, exactly.
that
So
now?
is this a good one? Yes or no?
No,
No,
it's
No,
outside
no,
the
right?
buy zone.
Yeah, exactly. Yeah. I was at a buy zone. This one, the ATR is $1.07, right? $1.07. Right. $1.07, 24.17. Right. Would this one be a good one to buy?
No,
Yeah, no, right? Halliburton. This one looked like a good one to buy. The ATR on this one is $1.31. Yes, no? It's already at almost $4 up.
no.
No, right? What about this one? The ATR on this one is $1.36, right? $36, that's 70, 36, 81, 33.81.
Yes,
definitely in range.
Yes.
that one's within the range.
Yes.
Yeah, that one's between the range. It is, right? What about this one? 1 ATR for this one is $2.40.
It's high. It's out of the range.
The range, right? And these are high probability trades. I know oftentimes people are like, oh, I can't find any. Believe me, if you look, right, we're looking for high probability trades. You can find one, right? The ATR for this one, $1.33, right? So here it's trading over here. All right, 133 is 35, 35.90, something like that. So what about this one?
Yeah.
Yeah,
Yeah.
so this one's definitely good, right? So that's how you pick, right? That's why you pick, and you just got to pick the best one out of these. This one is my favorite one, and I like Halliburton, right? Unfortunately, the energy sector right now, if we look at the market is bearish. We know that, right? If we look at if we look at maps, right? And maps being, this is the screener. Halliburton belongs to energy. Energy right now, it's not hot, right? It's not hot at the moment. Doesn't mean that it can't shift, right? It looks like it wants to shift direction. And Halliburton is definitely like coming up a little bit. But I like APA. APA is energy as well, but APA is actually moving, right? Unlike Halliburton, APA is moving. And, so APA is definitely one that I would definitely get into. Tech, other industrials, I don't like it. It's trading down right now, right? Don't like that, right? So if I were to pick one at this moment, it would be either APA, right? Even though it's trading a little bit higher, right? Or Halliburton, right? Did that make sense? Does it make sense how we trade the criteria that certain, we look at the criteria and we say, hey, based on these things, we're gonna get in this particular trade?
Yeah, that makes
Yes.
sense. I have a quick question just
Yeah, of
regarding
course.
the open interest and the actual volume for the contracts. I've gotten into a couple contracts that had, you go for the open interest, but have very little volume and you're kind of stuck in them. Like, where do you make that call before you get that call, purchase that contract based on, the open interest and the actual volume of the contracts?
Yeah, so the volume of the contract really doesn't matter, right? That's really irrelevant. What matters is the volume of the stock, right? That's what truly matters. Because you can have a volume of open interest for like 2,000, but then if the stock is trading like at 20 million, all that matters is that people are actually jumping into the stock itself. Does that make sense?
Yeah, so does the volume reflect, so the volume of the stock, does that reflect the actual trading, the contract volume?
Okay, again, the open interest or the volume of that particular contract is irrelevant, because the only thing that we're interested in as part of our trading plan, like, think about it this way, right? It's like Walmart, right? I'm not too concerned of how many people are in the toy section of Walmart. I'm more interested how well the business is doing by the millions of people that are actually in the Walmart. Does that make sense? The open
Yeah.
interest and volume is like a small section of so many different contracts. So as long as the place is packed and the more volume, the more excitement we get.
Right.
Yeah. So this one, I'm going to jump into this one, right? I love this one. So let's go here. So I'm going to use, I want to share this my screen with you guys because you guys got to see this. So the next thing is God, this thing is moving. Yeah, I know. I mean, it's moving too. This is a really good trade right here. It's a really good stock. Okay. Yeah. So, but we're learning, right? It's fine. Even if we don't get in it, we get in it a little bit late, it's fine or whatever. So I'm on TD Ameritrade, as you guys can see, right? And I clicked on demand, right? On demand is the virtual account, right? It's the virtual account here. On demand allows you to place trades in real time, right? Well, it's not going to do it for today. So it allows you to place trades in real time. And the way that you do it on here is very easy, very simple, right? Are you guys familiar with TD Ameritrade? Is that something that you used before? Anybody? Raise your hands, please. Yes, no? You can be vocal if you want.
No, I've been an E-Trade guy mostly.
Okay, no problem, right? So this is what we're gonna buy for this is what we're gonna buy for APA. And APA. So I'm gonna use on demand because Rob, you had a question, bro?
No, you said raise your hand.
Okay, yeah. I'm trying to go fast because this stock is like moving and it's kind of leaving that, Yeah. Yes. So APA, for this one in particular, of course, we like to pick 2 weeks out. So we're gonna pick the 14th of March, and we're gonna buy, because this stock is very affordable, right? We're gonna go with on the left-hand side calls, right? We're gonna buy calls. And this one in particular, this is not on real time, right? This is February 25th. So it's like a week before. So So this is the week before. So the option strategy that I want to use here, I always like to buy because this is less than $2, right? I like to buy right outside of the money, right? So you have in the money highlighted here. And if you're not familiar with these terms, we have a great class curriculum that we're putting together. It talks about all this stuff here. So in the money means that these have value, right? At the money means that the stock and the strike price are the same as the stock. I always like to buy here. So what I'm going to buy calls, right? On my virtual account. I'm going to go here, buy single, and I'm just going to buy 10 of them, right? I'm going to buy single, buy 10 contracts, APA, expiring on the 11th of March, 34 strike calls for $1.46, right? Of course, that we know that the premium, even though it says $1.46, we have to multiply that times 100, which is $146 per contract. And I'm buying 10 of them, right? I'm gonna go to the mid here. I'm going to the mid because this is the average, the middle of the bid and the ask for this particular trade, right? The bid and the ask is what the buyers wanna, the bid is what the buyers wanna buy it for, $1.33, and the ask is what the sellers wanna sell it for. You always wanna put it at the mid because that is the average between this one and that one. If you add this and that together, divided by 2, you get this number, right? And I'm always gonna buy a limit, and then I just hit confirm. I make sure this is locked, limit day, and I hit confirm, right? So it cost me $1,400, infinite profits, and my break even is $35.40, right? I hit send. Is the market closed? Let's see.
So my prices are showing different from yours.
Yeah, because this is the virtual account, right? This is the virtual account. That's why, and this is for the 25th, right? So on my actual account, the prices is $2 right here, and it's $150 for March 14th, right?
Okay, yeah.
So yeah, so it's a little bit different, right? For this one in particular, I'm just gonna buy one, right? We're learning here, it's a learning environment. So I'm gonna buy one. I haven't used this account in about a long time. So I'm gonna buy one here for 132, right? And it's actually higher than what I wanted to. Because I haven't used this account in a while because I closed all these accounts. Let me use my E-Trade account because I'm not using TD Merge anymore. I only have stocks there. Going back to the virtual account. We'll change the date here. So it's definitely going to be a little bit different. I wanted to show you guys the virtual account because ideally that's what I want you to learn at, right? So we're going to buy again it's almost the same price, right? The 34 call for APA, and APA is taking off right now. Did anybody buy it yet? No, yes, maybe so.
I'm in.
Okay. Yeah, so I just bought this one, right? I bought the 34 call for this one. And again, once we do that, right? I bought the 34 call. The next step that I like to do is fill my planning tool, right? Got to put in my planning tool. Where's planning tool? Where are you? So I go to my planning tool, right? I go to APA. I bought at 34.67. I plan to sell that. I'm going to say 1.5 ATR. Which is about 30, 35, 40, $35 and let's say 50 cents, right? 30%.
What was the premium you were shooting for?
I forget. It's I think $1.40. I had it on the screen for like a long while. I think $1.40 stop zone. So my stop zone is always 30%. So I need to transfer this formula. Why I didn't transfer over, I don't know. Value formula. It's not going off a C. And I bought the 34 calls, right? With 11 March expiration date. Expiring the 22nd. And it costs $1.40, right? $1.40. And I bought 10 of them, right? So making sure I fill this out. I haven't sold it yet, right? Haven't sold it yet, so I'm at a negative $1,400. Again, I bought APA. I bought it for using the strategy for, I bought it at $34.67. I bought it a little bit late, right? Ideally, we wanted to buy it at the 1 ATR, but you know, we were talking, we were discussing, great dialogue, and we kind of missed the opportunity. Nothing wrong with that. We wanted to buy it at 34.38. That would have been the best time to buy it. Nonetheless, we're still in the trade, right? We're going to take profits at the 1.5 ATR, which is $35.50 roughly. The stock price is going to be 30% of our stop zone. No, it's the premium, sorry. It's supposed to be G. G, yeah. So, so this stop zone could be any one of two things. It can be the premium when the premium gets to that 42 cents, 30%, or it can be actually how much you paid for it, right? Whatever you prefer for that formula. For this one, I'm going to have 30% of the premium. We bought the expiration. The option chain was 34 call, expiring the 11th of March, and the premium was $1.40. And we bought 10 of them. It cost us $1,400. Does that make sense? Currently, right now, we're at a negative because again, we haven't sold it yet. And as we look into, before I move on, any questions on the planning tool? Any questions on the planning tool?
So what did you do with the stop zone price again? You changed it from stock price to premium?
Yes, I changed it from, you can do either two ways. So if I bought this for $1,400, right? My formula here, the first formula was I, right? It's always the price of the stock. So that means that as soon as I lose if I lose $420, right? Like minus I3, that's the formula. So if my stock, right? My stock price, my initial investment gets to $980, it's gonna automatically sell it, right? How do we manage that? I will show you in just 1 second. But again, you can make the stop price 30% of the total premium, or 30% of the actual initial investment that you made on it. Make sense?
Got it.
Okay. So, and it costs us $1.40, and we bought 10 of them, right? And we bought 34 calls expiring the 11th of March. So the next thing to look at, once we've actually completed that portion, is we're gonna go back to here because this is important. Again, ideally, we wanted to buy any place here, right? The ideal mark is to buy at the mean, right? If you buy at the mean, perfect. If we would have done this faster, if we would got, if we got in like a little bit earlier, we probably would have bought it in like at maybe $34. But because we're learning and we're getting on a groove, we have some questions, right? We bought it a little bit later, but we're still doing well, right? We're doing well because all the indicators are pointing that this particular stock is going to go higher, right? See, the stochastics is pointing upward. The CCI is pointing upward as well, right? That's a really good sign. As you guys can see, right? We had a bullish here. This is a nice, beautiful doji here, right? And whenever you have a green candle like that, that means the buyers are in control of the market and people are excited to buy, right? And the energy sector right now is hot, right? So we bought it a little bit late, but it's still, we're in a good place, right? But remember, we always want to buy ideally at the mean. If we buy it at the mean, perfect. If we buy between the mean and the 1 ATR, it's acceptable. Make sense? Any questions? I know I kind of went fast over a few things. Any questions?
I have one, but it's a question about why did you switch from Ameritrade to stock options to E-Trade?
Because I sold all my stocks like about 2 months ago, and E-Trade was where I had my stocks for my son. So when I switched it over, I had to make sure that I had all the money together, right? So I sold all, because the market dropped about almost 20%, and I kind of saw that coming, and I kind of want to save myself a few $100,000. So I switched everything to E-Trade because that's where my CPA thought it would be better to manage one account because I had like 4 accounts running. So they thought it would be a good idea for me to just move on to one account. And I closed all my accounts on E-Trade except for one of them right now. Makes sense?
Yes.
Apparently it's hard for them to manage that, and I don't know why I pay them for, so, and I didn't want to get into that discussion with them. Yeah, so let's see. So for this challenge, I was gonna put some money here in order for me to do this, but I haven't done it yet. So yeah, so are you guys seeing my FinBiz account right now? My FinBiz, FinBiz account.
Yeah.
Yeah, so look where APA is trading right now. It's at 34.70, right? That's good. And again, we want to take profits at, what is the ATR? $1.77, right? So where do we want to take profits here, ladies and gentlemen, for this one in particular? If we bought it at, if the 1 ATR is 34, 34.38, right? And we want to buy, we want to sell it at 1.5 ATR. What is the 1.5 ATR? Somebody help me out. It's a learning environment. There's no such thing as a, okay, Lamont, I think Lamont has he got the answer. Okay.
No, well, I have a question. So I'm kind of stuck on, since we bought aftermarket, are we adding the ATR to what it opened at or what we bought it at?
No, the ATR, just the 1 ATR is the movement from the mean to that one to the ATR. The ATR is just the average, right? So if the mean is $32.60, the 1 ATR is 30. We identify the 1 ATR as $34.38. So we want to add $34.38 and half of that ATR.
Okay.
Right. So the ATR is 177, $1.77. That's how much it moves on average. So half of 177 is what, 88.5, I think. Is that right?
That's right.
So 88.5 plus 34 is what, 35, I don't know.
35, 48, 49.
All right, 35.49. So 35.49 is where we want to take profits at. Makes sense? So this would be our this is where we want to take profits at ideally. Does that make sense?
Yes.
Yes, sir.
You're very, very close, Dion, 36.08. See, now the stock is just going up and up, right? So remember, ladies and gentlemen, this is a learning environment. So please, you know, ask any question that you have, because I want to make sure that we understand this. And more importantly, we are, you know, we're in the same sheet of music as far as leveling out the bubbles when it comes to all this.
So Ariel, this is Chris Green. Happy to be on. First timer though, and learn. And
nice.
Some of this is very new. So typically, would that move up to the buy point happen in a day or over the course of weeks or?
Yeah, so for this one is usually, it really depends on the stock itself. So it usually happens between a day or two, right? Or within that week. We're expecting it to happen between the time that we buy it to a few days. But we like to pay attention to the indicators, right? We like to pay attention to the stochastics, because there are, you know, they're foreshadowing of what's to come. That's how I make my my market forecast week after week. And also I like to look at the candles. The candles tells us, you know, where the direction in which the stock wants to go. So to answer your question, it can vary between a day, 2 days to like a week or so.
Okay.
For this challenge, because we're trying to make profits every week, we're using more aggressive means to to enter a position and actually try to get profits within a few days. Lamont, did you have a question, comment? You had your hands up.
No, that was it.
Okay. So that's really it for today, ladies and gentlemen. That's all I have. We're gonna keep watching this. We're gonna get together tomorrow, same time. I'm gonna add a few other things that I actually forgot to capture in our lesson. We're gonna talk about the stack DMAs, and we're gonna go over this whole steps again, but we're gonna go a little bit faster. And I know we're definitely gonna have more participation, more questions. Okay, so we got into APA. We identify all the steps, right? And tomorrow we're gonna see how APA is progressing. Okay.
Yeah, I appreciate it. First time joining as well today, but definitely appreciate you, brother, for sure.
Hey, no problem. I forgot one thing. I forgot how to set up a stop zone for the stock. I forgot to mention that. I think somebody just hit me up. Let me show you guys how to set up a stop zone on TD Ameritrade. So the way that we do that, once you actually have purchased the position, right? If you right click it and then you go to create sell, right? The price here is the premium. This is the premium. If you go to the order and you hit stop, right? You go to order and you hit stop, right? You can manipulate here the price, right? And we said for this one in particular, because we bought it for $1.40, right? 30% of $1.40, it's about, I'm going to put it for $1, right? Ideally, I want to put 40%, 30%. So I'm going to put mine for $1 right now. And I'm going to hit confirm send. So that means that if it moves, the premium moves to $1, it's going to sell my positions. Make sense? And that's for the premium, right? So that was the last step that I wanted to go over, right? We're gonna meet tomorrow, same time. Please put your stops. Extremely important that you put your stop on your trades. That's how we protect capital. We're interested in making money and protecting capital always, right? So before I leave, yeah, anybody have any questions, comments? Somebody asked where exactly we can find the planning tool. It's on a YouTube channel. It's on the link that I put on Facebook. And if you follow the link, all the information is in the link. There's a shared drive that I created. You just gotta click on a shared drive document and then you can actually download it. Okay, guys, no questions, nothing heard. I appreciate each and every one of you for coming out here today. And we'll see you guys tomorrow, right? Hope you guys have a good day.
Thank you much, man. Appreciate you.
Hey, thanks, man. Have a good night.
You too.
Thank you.
Thank you.
Bye.